Okay, looks like we're live. So, good afternoon, everyone, and thank you for joining us today. My name is Alina Islam, and I'm a Senior Research Associate here at Red Cloud Securities. Today's webinar focuses on Strategic Metals Limited, a successful project generator with interests in over 100 properties, in addition to equity and royalty interests spanning a range of commodities and deposit types. For the webinar today, we have with us Doug Eaton, President, CEO, and Director, and Richard Wexler, VP Communications of Strategic Metals. Doug and Richard will provide an introduction to the company, including an overview of current exploration activities and catalysts that are lying ahead. After the presentation, we'll take your questions live. Please send us your questions via the chat box, and we'll get through as many as we can. But before we get started, I do need to mention the fine print. So for Strategic Metals, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the Strategic Metals corporate presentation located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Strategic Metals specific disclosures. And with that, I'll hand it over to you, Doug and Richard. Please take it away.
Thank you very much. I know a number of people on the call are probably somewhat familiar with the company already, so I'm not going to go into a lot of detail. I'll try to keep focused on what's most current. As stated, there's the forward-looking statements. I think that we'll just gloss over it. You can look at them at your leisure. So, Strategic Metals is a junior mining company. We trade on the Venture Exchange. We've been around and active for since the early 2000s. We've acting mostly as a project generator. As stated, we've got over 100 mineral projects that we have interests in. In most cases, they're 100% owned properties with no underlying royalty interest. We cover a really wide variety of mineral deposit types and metals with our various holdings. But one thing that should be noted is that we focus on Yukon territory primarily, a little bit in BC and adjacent parts of Northwest Territories, but really the company is focused on Yukon. And the reason being is that a couple of reasons. First, that's where our data and bases are most extensive and our experience stems from. So we really like to stay in a jurisdiction that we know very well. And secondly, the Yukon has some of the lowest property holding costs of any jurisdiction in the world, which allows us to, acquire projects and sit on them until they become timely. That's how we've amassed and are able to maintain such a large number of property interests. Most of those property interests are, as I said, are active exploration projects. Some are, though, are royalty interests. We hold NSRs in 13 projects at present and intend to continue to increase those NSR holdings. We operate by finding partners in many cases to do the more expensive types of exploration like drilling. We've got a number of projects that are now under option or are in JVs. We mentioned a couple there. We'll talk a little bit more about them later. Similarly, it was mentioned that we have a large portfolio of holdings in other companies. They vary from investments that we've made directly in companies, buying shares in companies that we think might have attractive exploration projects. Some of the interests we acquired through deals that we did where we provided maybe the prospectus property or a qualifying property for a CPC. But, it's a very, very large holding. We have about $38 million worth of shares of other companies at the present time. And again, we're going to come back and talk a little bit more about that. We have $3.8 million in cash at the present time, no debts. So we think that we're quite well funded going forward for work that we anticipate doing in the next year or a couple of years. And finally, we mentioned that we're focusing on Yukon, and we've got a pretty strong exploration team that's been active there for a very long time. Myself personally, I've been working in Yukon for over 50 years, so we've got a lot of background and have been able to show some pretty good success. Just a little bit there on the management team. It's on the website. I'll let you look it up at your leisure. Okay. In the red box is kind of the summation, but before we get there, we've got about 110 million shares outstanding, 9 million options, and that brings us to 120 fully diluted. The market cap right now is about $33 million, cash 3.8, and shareholdings of 38 million. So you can see that we're trading at a fairly significant discount to our market cap, or market cap's a fairly significant discount to our assets. Of course, that doesn't reflect the property holdings at all. Over the past 10, 12 years, we've distributed about $20 million to our shareholders, which I think sets us apart from most of our peers. That's a fairly nice return that the number of shareholders been able to capitalize on quite well. As said before, we have no debt. Management owns just under 9% on an outstanding basis. Condeer Partners have a little over 17%. Sprott is right around 9%, and Ruffer is up to almost 10%. So with good institutional following, and the management team has definitely got skin in the game here. Okay, why do we focus on Yukon? Michael Gray recently gave an interesting talk up in Yukon, and he pointed out that there's a lot of major mineral trends that extend through the territory. One of those trends is the Northern Gold Province. You could also make it Gold Copper Province because there is fairly significant overlap between the copper and the gold. Not one for one, but fairly significant. It's a belt that runs through Alaska and right through the heart of Yukon and down into BC. And it's one of the best endowed gold provinces in the world. It's got about 10% of all the gold resources that are currently known in the world. There's a number of very large deposits, and lots of lesser deposits. You can see on the map that there's deposits containing over 50 million ounces and a number containing over 20 million, and some of those are in Yukon. But compared to Alaska and British Columbia, I think that Yukon has been underexplored for various reasons. Principally that land claim negotiations and devolution took place in the late 1990s and 2000s, and we lost almost a generation of exploration, and we've been making up for that in the last 10 years. Most of the large gold deposits in Yukon have been defined in the last 10 years, so it's a very active belt. And because it's active and because of the large holdings, the majors have been really taken major positions in a lot of projects in that belt. I think they like the size of it. They like the fact land tenure is very secure there. So it's very much an emerging exploration area. One of the subsets within the larger gold province is the Tombstone Gold Belt. And I mention that right now because it's particularly attractive. It's getting a lot of attention because there's some new mines going into production. It's a complex bit of geology. The belt is offset by the Tintina Fault, and the extension in Alaska, which includes the Fairbanks gold mine, is on the other side of that fault. Most of it, though, lies in Yukon. There, the best known deposit is the Victoria Gold Eagle deposit, and they've just announced another extension to their mineralization at a new deposit called the Raven, which is fairly near the mine. In addition to that, though, there have been other producers in the belt. Keno Hill, which of course is best known for its silver, lies in the heart of it and quite near near the Victoria Gold property. Brewery Creek was in production and is looking to go back into production over a little closer to Dawson. There's a couple of very active programs that I think are extremely important to us. One is the Snowline Gold Rogue deposit, which is over to the east of us, in the eastern part of the territory. That's I think a very important discovery. It's long intervals of good grade gold mineralization. In fact, more than 200 meters of better than 3 gram gold. So very important discovery. We've got a number of projects in the belt, both royalty interests and active exploration projects. We've highlighted 2 of them there, the Mount Hinton and the Lance. They're 2 of our larger holdings. Mount Hinton, I think we've got a slide for that. I'll just bring it up right now. Mount Hinton lies directly adjacent to Keno Hill ground, or what was the Keno Hill ground is now owned by Hecla Mining. They recently bought out Alexco. It lies a little bit further to the southeast of the Eagle deposit, which is shown in the upper corner of that map. And they recently discovered a very rapidly progressing Ormac deposit, the airstrip, power line, and Oryx Hills, which are in the southwest portion of that map. So we're in a pretty prolific belt. The Canada's second largest silver district, and 2 very important gold projects that are rapidly expanding. So we think we've got some pretty key ground there. Our property has a bit of a hybrid. It's got some of the high grade silver like Keno Hill does, but it's also got very high grade gold veins. There's a bulk tonnage target on it. It's marked by a mag low, and we know that there are intrusive rocks on the property. So it's a target in a portion of the claim block we haven't even looked at yet. Most of our exploration is focused on high grade veins, and when I say high grade, many of them are exceed an ounce per ton. They're in the same stratigraphy as the Keno Hill mines. So I think that we've got a very good project there, road accessible, and I think that we'll definitely be doing work in there, or have a partner do work on it in the coming year. There'll be a news release later this year talking about work that we've done there in our own regard in the last year, but we haven't got the assays yet. So again, a little bit more on Mount Hinton, just shows the extent of the soil geochem anomalies and some of the discoveries we made. This information is all on our website, so I won't spend too much time on it here. So another one of the belts that runs through Yukon is the porphyry copper belt, and like the gold province, it extends into Alaska. A little bit different, a little bit more constrained than the gold. It's associated with intrusions that range from Triassic in age down to tertiary. We've got a number of porphyries in that belt, taking advantage of the company's knowledge and my knowledge from having worked on some of the more important porphyry discoveries in Yukon, including the Casino deposit. We're pretty aware of what the geochem signature looks like, and we've been able to amass what we think is an exceptional portfolio of porphyry projects. We worked on a few of them this year, and there will be news releases coming out on them in the next month or 2 months as all the information gets processed from our work. But again, I think you'll see drilling on at least one, if not more, of those porphyries next summer. The Mint property, that's one of the porphyries. It's probably the youngest porphyry deposit known in Canada. It's about 39 million years old. Very high level the porphyry. Most of the rocks haven't been eroded away, so the entire system should be there. We drilled a hole in 2012 targeting a slightly different model than the current one, and got some very promising results, mostly for gold. But we could see that we had the right kind of alteration, and we were in a huge system. So we sent the crews back last year, and they did some more work and found an area about 800 meters away from the closest drill hole where we were getting all the features that you'd expect to see with a high-level porphyry. Lots of veining, the right type of alteration, and some pretty good mineralization. In fact, much better copper and moly numbers than we had in the area that we drilled. So very much looking forward to having a drill on that one next summer. And that's just a little bit of a cross section to show you. You can see the high gold numbers on the eastern side of the target, and we think that we're off the shoulder of the main porphyry system, and we'll be drilling in that area on the left-hand side of that figure. Another one of the porphyries that had some work this year is the Alada. It's quite near the casino, which is by far the largest porphyry in the Yukon and one of the largest undeveloped porphyry deposits in the entire world. It's over 3 billion tons. It's an enormous deposit. We sit about 40 kilometers to the south of casino at Alada. It has a lot of the geochemical features that we see at casino in the same kind of weathering regime. So I think there is a chance here that we'll have a bit of a leach cap developed on top of the porphyry system, and potential therefore for some supergene mineralization beneath the cap. This property's never been drilled. It's never even been trenched mechanically. Again, we see all the right features. We've got a strong mag low showing underneath the geochem there in the area in blue, which suggests that we have an area where the magnetite has been destroyed and replaced by sulfide minerals. All the work we've done on the property shows that there is strong surface weathering, which probably means there's also leaching of metals at surface, and potential therefore for the supergene below the leach cap. So again, we're very much looking forward to getting a drill on it next year. The work we did this year confirmed the models, so we're all ready to drill on it. Craig, shifting gears a little bit, one of the other belts that runs through the Yukon a little further to the northeast of the copper and gold are lead zinc occurrences. They include the very famous deposits in the Selwyn Basin, Howard's Pass and Tom and Jason, and which Fireweed is working on now, and announced some spectacular results last week. They also, though, include carbonate replacement, and there's a number of deposits on the northeast side of the Selwyn Basin that are the carbonate replacement style. Craig is one of those deposits, and it's one that we acquired this past year. We had a crew on it doing some detailed mapping and more geochemical work. We now have a very prospective target. Previous work back in the 1970s defined a deposit. They had about 23% combined lead zinc with about 4 ounces of silver in a tiny portion of the overall area. There's a lot of drilling done outside of that deposit area, or the area of the resources at the Craig deposit, but it's much bigger than that resource would indicate. But it wasn't drilled off in enough detail to bring all of the mineralization to the resource model. But in addition to that, we have a string of other carbonate replacement style mineralization running off to the east of the Craig, and the drilling that was done in those zones was also much more limited, but was also very favorable results. To the west of the Craig, the carbonate facies that host the carbonate replacement mineralization seems to pinch out, but it goes into shales. And the shales are the rocks that host the mineralization in the Selwyn Basin at Tom and Jason and elsewhere. And we're in the same general age of rocks. And we have a geochem anomaly that extends pretty much completely from the Craig deposit over to the Scott zone and continues actually to the east of that. And that target is completely untested. It's a very strong lead zinc anomaly. So there's potential for SEDEX mineralization as well as carbonate replacement at this target. So I think it's one of the most interesting lightly drilled targets in Yukon. And I think that if we get back into a strong base metal cycle, this target will get a lot of work. critical metals. Everybody is talking about critical metals these days. We've been working on it almost since the time the company was formed, and we've amassed, I think, a spectacular portfolio of critical metals. They include a net smelter return in a major spodumene bearing pegmatite camp. That's of course lithium. Spodumene is very much the preferred source of lithium, and I think our NSR there could be quite important. We've got a number of good tin projects, and tin is one of these metals that isn't produced to a great degree in the developed world, and is in relatively short supply. It's critical to new technologies because it's used in solders, among other things. We've got a number of good vanadium prospects, which are better grade than most of the projects that are getting a lot of attention in a place like Nevada and Australia, where there's also shale hosted vanadium. So again, I think we've got to do more work there. But what I want to really point out specifically is the BAT project. There'll be a news release soon on that one. We worked on our BAT property this year. It's in southern Yukon, not very far off the road to Haines, Alaska. It contains cobalt with copper and gold, and we've got some pretty interesting styles of mineralization there. There's both epithermal veins and stockwork zones that host copper with very strongly elevated cobalt and gold, but there's also potential for VMS. We're in the same package and same age of rocks as the Myra Falls camp on Vancouver Island, and we have some very strong evidence of VMS mineralization there. So stay tuned for that one. It won't be long before we'll have a news release. We mentioned some of our partners, the projects they're working on. One is CAVU Minerals. They're working on the Hopper Copper project. It's a very well-developed copper skarn around a porphyry center. The porphyry target has been lightly explored, and I think there's lots of work to do there still. But the skarn has had a lot more work and has produced some, I think, excellent results. Just to give you a scale of the target, the Casino deposit is shown on in the insert map on the upper right-hand side, and the copper geochem anomaly for the Hopper is shown beside it at the same scale, the same intensity. So you get an idea that it's a potential here for a very large system. And one of the things that distinguishes Hopper from the Casino is that even though they're both in the same age and part of the same system, we have road access. We're several hundred kilometers closer to the ports and to have actual road access right now. So I think if CAVU continues to work here, I think they have a very good chance of having a developable project. And some of the mineralization there from the skarns graded over 2% copper and with a gram of gold, so over good thicknesses, over 20-meter thicknesses. So I think they're really onto something pretty promising there, and they've got a lot of work to do before they complete their earn-in. So talking about some of our equity investments, we have some shares of CAVU as among our portfolio, but we won't be talking more about that right now. We're going to look at this partly because companies in the portfolio are very active in their own right, so it really gives us a lot of leverage to exploration expenditures by other parties. Rockhaven, they did a large drill program this year, which followed up on programs they've done the last couple of years, which were all done subsequent to a very positive PEA that was completed in 2020. So there's a lot of new information that will have been added to the project. That information right now is being compiled. They have taken a lot of material that they're doing advanced metallurgical test work on, and as soon as that metallurgical work is completed, they'll be putting it together with new geotechnical information, where they've been looking at what they can do for open pitting and what kinds of pit wall steepnesses they can keep. They'll be putting it together with the assay results from the last few years. And with that information in hand, they'll be able to come up with a new resource model that will be, I think, well, there'll be two major aspects to it. I think there'll be an increase in the total ounces, but more importantly, there'll be a continued conversion of inferred to indicated. So they'll have a much larger, much larger indicated resource than what they had previously. That'll allow them to complete a pre-feasibility study, which is expected in about 6 months' time. So I think that could be very, very important for Rockhaven, and hopefully will lead to an increase in the share price, which of course would be beneficial to us because we're a large shareholder at just under 30%. Terra CO2, working on an alternative to Portland cement. Companies very well financed with some exceptional backers, including one of Bill Gates' incubator companies, Rio Tinto, and Lennox, the big home builder in the States, have taken huge share positions in the company. We're still sitting with a little under 12%. We've got some warrants that we're going to have to make up our mind on. They're very much in the money. They're exercisable at about a quarter of what the last financings were done at. So I think we'll probably be taking them down. They're making good progress, still working toward putting their first commercial plant in, but getting a lot of patents approved, and I think they're onto a really important technology that not only is cost competitive with conventional cement, but has some huge environmental advantages, produces way less CO2 and way less nitrous oxide than conventional cement production does. I think it's very timely. GGL Resources is in the midst of a drill program and an underground rehabilitation program at the Gold Point project in Nevada. I think that's going very well. They're opening up some more of the former producers that were on the Gold Point property, and looking also at potential for bulk tonnage as well as the high-grade veins. They also did a trenching program at their McConnell Creek program, a project which lies about 20 kilometers south of the former Chemist mine in central BC. It's very accessible, and there should be news coming out on both those projects in the next couple of months. So we look forward to that. Honey Badger, it's a company that we optioned some of our properties, one of which was in the Tombstone Gold Belt too. They're active on a number of fronts. We've got 20% of that company. Silver Range Project Generator, one of our spin-out companies that we dividend the shares out to the shareholders on. They're active mostly in Nevada, but also a little bit, none of it, in Northwest Territories, and they're operating quite successfully in their own right. We still own 17% of that company. Precipitates, working on projects in Newfoundland and Dominican Republic, most active right now in Newfoundland. They should have news. They had some drilling that was starting up on one of their projects, so we'll see what they come up with. Again, we hold a little under 16% of Precipitate. Broden Mining, one of our, I think, most prospective and most important projects. We hold a little under a third of the shares of that company. They're working to bring the Faro District back into production, partnered with the Ross River Dene Council, one of the First Nations in Yukon, and the one in whose traditional territory the mine is located. We're still waiting for the final agreement to be signed, but I can tell you that they are making very good progress on both the engineering side of that project and I think on the political side as well to get that agreement finalized. So again, nothing I can report, but I think they're making progress still. I think we've got very important holdings, about $38 million worth, as I said. And I think that if the share prices improve, if we get into a strong market here, I think that dollar value will increase significantly. That's just a little bit more on Broden. Why do we think it's important? Well, Faro was the largest mine ever to operate in Yukon, and only about half the metal in the district was mined, or the known metal in the district was mined. There's lots of exploration potential in the property, and some of the deposits are one in particular, the Grom, is ready for redevelopment. There's about a little over 5 billion pounds of zinc in deposits and the resources that lie in the district, 3.5 billion pounds of lead, 111 million ounces of silver, and almost 1 million ounces of gold. So it's a really, really important camp. And again, it has all the infrastructure that you want there, excepting that they have to build a new mill. But it's a brownfields project with good First Nation support. And that's just a little bit more. I won't spend time on it. We've talked about this in previous meetings. The land package we'll be putting together, hopefully, is the area shown in red, purple, and green. The green is ground that we've got an optional right with Silver Range or optional purchase agreement with Silver Range on. The purple is lands that are owned by or handled by the receiver, but they're is done on behalf of Canada and Yukon. Red is part of the federal reclamation area that we've made an agreement with Canada and Yukon on to acquire. And the area shown in blue is the area of reclamation which we are not taking on any liability for or acquiring. That's where the bulk of the federal reclamation project is located. So our environmental liability we're taking on if this project goes ahead is very much limited. So what's going to happen here? We've got Rockhaven, of course, with their the whole series of results, drill results first, metallurgical information, new resource, and results of a pre-feasibility. That'll all be happening over the course of the next 6 months. Broden Mining, keep your fingers crossed. We're waiting for final signatures on that agreement, and that could happen, anytime. Right? We just have no control over it, but hopefully it'll happen soon, and that would be a massive trigger for us. Terra CO2, if we hear that they've gone into production, that can only be good for the company, and hopefully they'll be going in, at some point here to going public, which will free up our shares. GGL, as I said, drilling and underground work there. We've got a pretty good leverage on that stock with nearly a third of it. So we hope that they've come up with some pretty good results. And finally, we have got results from our exploration we did this year. We spent a little over $1 million, between $1 million and $1.5 million on various projects. And as with everyone, the assays have been slow coming out. We're just starting to get a lot of the key information, and some of our data is being processed by geophysicists, and again, they're under a lot of pressure from their various clients. So we've been delayed getting some of our final outputs for some of the projects. So we expect news releases on our own projects, and then in the next few weeks to months. Also, we're continuing to talk to people about other options, so that again, keep your eyes on us. I think there will be some news in regards to option agreements. So lots going on, and very much like to hear your questions if you've got any. And finally, there's a little contact information for you.
All right. Thanks a lot, Doug. So we can now get into the Q&A portion of the webinar. Just as a reminder to our participants, you can type your questions into the chat box at any time. So Doug, we do have quite a few questions that have already come in. So first off, what is the significance of the recently announced agreement with the Teslin Tlingit Council? Does the agreement signify the willingness of the First Nations organizations in general to work with Strategic as a trusted preferred partner? And if so, how is that significant?
Okay, there's a couple of questions there. Let's take the first one with the agreement with the Ross River Denny Council. Yeah, that's a very important agreement. The agreement's actually with Broden Mining, company that we control, but or I have a very large share interest in it. I shouldn't say we control it. There's a very capable CEO there, Donald McGuinness. He's done a lot of work with governments and First Nations on various projects, a lot of them power projects. He's very, very adept at finding consensus. I think that it will go forward. government of Canada allowed us to make an announcement that the agreement of the agreement, which I don't think they would have done if the will wasn't there. And they very much, everything I'm seeing, they're very much on side still. Would like to see this project go ahead. As I said, the First Nations see it as a landmark agreement for them. It's a major step in their reconciliation with Canada. It gives them an opportunity to do very well financially, but also get a lot of recognition for the input that First Nation members had in the discovery of the project. It's a chance to redress some of the negative consequences to their community that the previous mine had. So I think it's really important. You broader question. Yes, I think the First Nations in Yukon are willing to talk to the companies. I think that we're in the process of getting new mining regulations. We're in the process of completing land use planning in various parts of the territory. But I can tell you that my experience with the First Nations is that by and large, there's areas they're concerned about, but if an area has had a prior disturbance, they particularly they are very eager to be involved in projects. They see lots of opportunities for services and employment and even direct equity participation. So I think that Yukon is on the cusp of a lot of very important mines being developed, and I think the First Nations will do very well by it. We've been a leader in First Nations relations in Yukon. We've signed economic benefits agreements with 3 First Nations now. What sets us apart from some of the larger companies who've signed or more advanced projects that have signed economic benefits agreements, we've signed agreements that start at the very, very earliest phases of exploration. So the First Nation is aware of what we're doing very early in the exploration process. In fact, as soon as we stake claims, they have the opportunity to participate in the planning of programs and certainly make us aware of their concerns and work with us jointly to understand what we're trying to accomplish and maybe what mitigations can be undertaken to address concerns that they might have. So I think we've been very forward in our thinking and our practices with the First Nation. And I think it'll be very beneficial to strategic going forward to having been so proactive. So hopefully that answers that question.
Right. Okay, thank you for that detailed response. So next question, Doug. Now that Strategic again owns all the rights to Mount Hinton, do you anticipate moving it back to the top of the priority list?
I would say it'll move well up the priority list. I wouldn't necessarily say right to the top. And the only reason I say that is I think that with the increasing interest in copper, I think that some of our porphyry projects are rivaling it for importance. But certainly Mountain Hinton is one of our major projects. It's last time we drilled, we had some very good results, and I think that when the news release comes out here in a while, there'll be an update. I think we've identified additional targets on the property. I think Hecla taking over Keno Hill is potentially important for us. They've got a number of former mines and current exploration activities underway on their own claims, but they've got quite a good sized mill there, and they've always struggled throughout the history of that company to feed that mill. There's been times where they've had enough headings to provide the materials that they need, but there's also been long periods of times where the mills operated below capacity. So this new mill that they built is even bigger than the old one. So I think that Hecla is a very, very good underground miner. I think that they're going to be looking throughout the whole of the district for mill feed, and I think that our Mount Hinton property has the ability to provide a lot of ore for them if they choose to. So I think that we likely will be talking to Hecla, or anyone that we're talking to will be about that project as partnerships with it. We'll certainly be looking to Hecla as a potential partner somewhere along the line, because as I said, I think they're if they put that mine back into production, that they may have enough ore initially to start it back up at full capacity, but over time they'll need more ore from other veins nearby.
Okay, with that answer, Doug, I think you answered another question that we had here. So I'll just move on. You mentioned drilling and drill results and the delay that you've been seeing. Do you anticipate that changing anytime soon and for drill results to start coming back sooner?
Well, it's a frustration for every single exploration company in our sector. Snowline Gold, for example, just one that comes to mind, drilled I don't know 14, 15 holes this year, and they've only got the results of a few of them. And it's for some reason, and I can't answer why. The labs have just fallen badly behind, and it's a major problem for the industry as a whole, because especially in a place like Yukon, where the exploration season is fairly short, and it's almost impossible. No, I'll go for that. It is impossible now to start a summer program and have results and be able to follow it up the same summer. That's a massive disadvantage. We used to be able to get results in 7 days, and now we're lucky if we get results in 7 weeks. Um, the I don't know what the solution is. I know that there's concern throughout the industry about it, and I certainly hope that new labs open up or labs expand their capacity. But it's a real bottleneck and a real black mark on the service sector, mining service sector in North America at the present time.
Okay. All right. So I know on your presentation, Doug, you mentioned I think you have about 3 to 4 million in cash right now. But would you anticipate another private placement next year?
Um, I will never say no. It would partly depend on what happens with some of the shares that we hold in other companies. If we were able to get a strong market and get some liquidity there, and we're able to sell a significant number of shares, there'd be absolutely no need to raise more cash. Um, it Similarly, if we run modest exploration programs, we don't need to raise more money. But if we, for some reason, were to decide that we wanted to significantly up our game, to do work on our own, on our own right. In other words, if we didn't option a number of our most prospective properties out, then yeah, I think we'd have to think about raising some flow through. There's a particular program right now that's available in Canada. It hasn't had a lot of uptake. We were probably the first company in Canada to do one. At least that's what we're told. It relates to critical metal projects, and there's a nice top up on the flow through for critical metals. And For example, we got Richard can correct me on the number, but we the back end buyer on our flow through was 40 cents, and we're actually put them out at 60 cents. So that's a pretty substantial premium. So if we were to explore, I think that we would probably raise most of the money for critical metals projects if we were to do it. But it's kind of a long-winded answer. But shorten it up, it depends what deals we do with other parties. If we're able to do a lot of option agreements or sales agreements, I don't think we'll have to do any kind of financing. If we're able to sell some stock, we won't have to do any kind of financing. But if we decide we want to be really, really aggressive, I wouldn't say that it's impossible we do a financing. So that's as fair as an answer as I can give you.
All right. Moving on to some of your equity investments. I guess can you talk about how Broden is progressing both towards an operating mine and towards an IPO?
Broden is doing technical work, even though they haven't finalized their claim ownership yet. They're confident enough that it's going to happen. They are doing technical work. Um, I know that they anticipate having a PEA available soon after anything is signed, and I think that PEA is the immediate prelude to going public. But again, it all hinges on when do they sign their final agreements, getting ownership.
Okay, on Terra CO2, um, so I'm just going to piece together the questions here, but can you talk a bit more about the Bill Gates Foundation and how they plan to use mine waste or the CO2 credits?
Okay, yeah, it's a bit of a. I think I understand the questions. Okay, so when the company I founded the company and Strategic put up a lot of the initial seed money, which got us started on it. But the company has got a very aggressive CEO. It's now domiciled in the United States. It's registered in Delaware. It's they've been able to approach a number of the incubator companies that are interested in new technologies and get them to be investors. Bill Gates Breakthrough Energy was the first major one of those to come on board. They took part in two different placements now, and they're the largest shareholder in Terra CO2 at the present time. Um, Most recently, Rio Tinto got very interested, and their interest obviously relates to potential to reprocess mine tailings, the rocky parts of mine tailings, and use them for cements. One of the areas of mining that's getting a lot of creative thinking applied to it are tailings disposal. And conventional wet tailings in many jurisdictions can no longer be done. It's just not politically acceptable. Dry stack tailings um, are a solution. It's a more expensive solution, and it's not as perfect as many people would like to think. There is another emerging technology which involves a partial cementation of the tailings, and I think that that's in part what Rio was interested in. If they can generate material on site and use that as a binder, then you really can decrease the permeability in the tailings and make them extremely stable physically. And I think that long term, essentially turn them back into rock again. And I think long term, that may be, where the mining sector goes. Certainly for underground, for many years, there's been backfill of stopes and whatnot in some mining scenarios. And again, they need some kind of binders to make that work. And so I think that Terra is interesting on a lot of levels. It's important for just traditional construction. One of the projects that they were involved in was some test work on road construction. I know that Lennox is a big home builder and is certainly interested in actual direct construction applications. So I think it's an enormously important technology. It's got potential to increase the CO2 footprint of one of the largest polluters in the world by more than 50%. That's enormous. It would be one of the biggest contributors to decarbonization out there, and it can be done without cost, which is what's really remarkable about it. And it's also a huge reduction in nitrous oxide generation. So it wins on two fronts environmentally.
All right. So just moving over to some strategy questions here. How do you make the decision to drill a project yourself versus finding a JV partner to pay for drilling?
Well, there's two main things that push on that. One is can you find a JV partner? That isn't it quite as moot a point as it might seem. It's not all projects at all times are attractive to someone. But the real answer to the question is sometimes a project needs assessment work, um, or in other words, work to maintain the claims. And there really isn't anything else that you can do to advance the project. You've done the surface mapping, you've done the the geochemical work that's justified. Maybe you've flown airborne uh, surveys to get geophysical information and also to get visual information on the project. Just you've run out of worthwhile things to do, and drilling is really the only thing that's left that can test a target. And so that's, in some cases what drives it is you need to spend some money to work on the project, and you think that you're there. Sometimes it's a little bit more fundamental than that. You've got a really, really promising target, and you think that you can do a spectacular deal on it if you can validate the concept. And I'll put mint in that category. You go in and one drill hole or two drill holes there could prove that you're into a major porphyry deposit. And the deal that you could do if you had 300 or 400 or 500 meters of good grade porphyry mineralization would be immeasurably better than the deal you could do if you option it out and let somebody else do the work. And typically, majors will come in and they'll say, we'll offer you $20 million worth of work on that property for 70%. Well, so you've given up 70%, and they're going to go in and they're not going to spend $20 million right away. They're going to spend $20 million over time. So they'll go in and they'll drill the same one or two drill holes that you would drill to test it to see if it's there. And if they don't like what they see, they walk. So for $500,000, $750,000 of expenditures, they get to see whether they're onto a major discovery or not. And the problem is that if they make that discovery, $20 million isn't that much money to spend on that type of project. In fact, it's a steal to get 70%. If we go in and drill really good results, you could do a heck of a lot better deal than that. And you wouldn't maybe have to give up as large a percent, or you might get a deal where you're carried to production or something at the same level of interest. So sometimes the benefits, the potential benefits, just far outweigh the risk of a bad hole. And one bad hole isn't going to kill the project, but one good hole might make the project. So that's the strategy.
Okay, could Strategic Metals become a royalty company?
Yeah, that's one of the ways that we're kind of trending here. If we do more deals, I mean, we'd have to do quite a few more, I think, before we could say we were actually a royalty company. But if we continue to do deals and continue to retain SRs, which I think we intend to do, I think we over the next few years will build up our royalty base to the point where we will become a royalty company de facto, or we may become very, very attractive to royalty companies, and they may end up swapping some of our royalties for very large share interests in other existing royalty companies. So, again, I don't know where we'll go, but I think that we certainly intend to continue to build up our royalty package for sure.
All right. Carrying costs in the Yukon seem to be lower than in other locations. Can you give some detail on that?
Well, they're absolutely lower. It's $100 per claim per year. And actually, on a lot of smaller claim blocks, one of our toughest problems is by the time you move a crew out there to do exploration and do even a few days worth of work, you've not only covered your assessment requirements for 1 year, you've recovered your assessment requirements for a number of years going forward. Unfortunately, you can only build up assessment credits from 1 year's work for 4 more years. So in other words, if you spend $400 per year on your claim block, each of the claims in your claim block, then you can get 4 years of assessment credit, which carry forward. And that can be additive. But if you spend more than $400 on each claim in the block in a year, the remainder is lost. So we're very careful in our exploration, and sometimes we have to work on a property for a number of years before we get complete coverage, just to maximize our assessment credits. An example, case in point, a lot of property, we've worked on it 4, maybe 5 years now, doing geochemical surveys and mapping and prospecting. We finally got the surveys across pretty much the whole of the property, but it's taken us that much time because if we'd done it all in 1 year, we've only would have got 4 years of assessment credit, and right now we'd have no assessment credit left. As it is, we've got about 15 years of built up assessment credit. So it's very important. It's cheap, but you have to be smart in the way you manage your assessment. If you jump in and do a big program, like I said, much of your expenditure may not qualify for holding costs. So management of your expenditures is very important.
All right. So we're going to be running out of time here, Doug. So I'm going to conclude the Q&A portion of the webinar. Doug and Richard, thank you again for taking time to host this webinar with us today. Just as a reminder for our audience, our next webinar will feature galleon gold, and that's tomorrow, November 29th at 2 p.m. Eastern. Thanks for tuning in with us, everyone. Have a great day.